Hey, this is Driving Markets, driving while talking about markets. Let's have a quick wrap and let's see what was driving markets yesterday and what is likely to be driving markets again today and in the next few days. Okay, yesterday, again, start of the month, much of the same. What happened in February is fear of interest rates, fear of recession, and fear of inflation. Now, the main issue yesterday was that the 10-year US Treasury touched 4% yield, which is the highest since November. Remember, I've been saying all along, since the yield dropped down to 3.35%, I've been saying that US 10-year Treasuries are going to rise. Why is it so important? The reason being is because the US 10-year Treasury yield is a lead indicator as where the bond market suspects, expects, analyzes, or foresees where interest rates are going. And as the yield rises, you'd expect interest rates to rise in the bank. Why would the yield rise? Quite simply because bond prices are falling and bonds are being sold off. Bond prices are falling to make it more attractive to invest in as opposed to other interest-bearing instruments or accounts like bank accounts. Okay, so as the yield rises, this impacts significantly on high-tech stocks and those assets that require funding. For example, I keep saying over and over again, things like high-tech stocks that are vulnerable to interest rate rises. All of the Teslas, the Metas, the Apples, all of the Salesforce and all of the startups are highly sensitive to rate rises because they need constant funding, and the more expensive money becomes, the more difficult it is for them to operate. Okay, remember, I've also stated that bond yields will go to around about 4.5 to 4.6%. Okay, that's on the 10-year. Now the short term, the 6-month and the 1 year are over 5%. That's at the highest it's been in donkey's years. I can't even tell you how long, but it could be easily back all the way to 2007 or earlier. Okay, I haven't even checked into that, but the short-term yields on the 1 year and the 2 year, the 1 year and the 6 months are running at 5%, and that's frightening markets because, as I've stated earlier on many times, when there is a divergence or inverted yield where the short-term yields are higher than the long-term yields, that is a clear indicator. It's been like this already for nearly 9 months. Okay, it's a clear indicator of a upcoming recession. And the wider the yield, the wider the difference is between the 6-month, 1 year, 2 year and 10-year, then the deeper the recession will be. Now, a lot of analysts and a lot of people are saying that we're not going to go into recession. Now, we are going to go into recession. We're going to go into recession. It's going to be a deep recession, deeper than 2008. Okay, so all of those hedge funds that have sold stock last year and made significant amount of money as a result of that, they are still holding stock because they expect inflation to go up. In fact, 2 presidents, one of them Bostic and one can't remember his other name, two presidents of Federal Reserve banks have stated that the cost of borrowing needs to go much higher, and that's going to impact obviously on the US dollar and other currencies, and also things like cryptos and also other assets like shares. Okay, so it's very, very important that you focus on that, very important that you follow that. Inflation is only going to go up. Talking about inflation, German inflation came in higher than expected. Month on month, year on year came in higher than expected. So the trend of change of direction inflation is up. Remember, for the last 2-3 months, everyone's been hoping or seeing numbers that's going to actually push inflation down. And I said all along that is a blip. If you look at yesterday at equity markets, I think the Dow closed up about 6 points. The Nasdaq was down 74 points, and the S&P was also down. Cryptocurrencies were slightly up at 23,400, slightly solid there, not really moving around. But the 10-year US Treasury is running at 3.99%. Now, what's going to happen, what's going to be driving markets going forward is this focus on inflation and this focus on interest rates. And the March meeting of the FOMC are going to raise rates by at least 25 basis points, and I say 50 basis points. Okay, and I want to thank one of my viewers for mentioning yesterday that it's Matthew McConaughey. I hope he's pronounced it correctly. He's the Hollywood actor that he's paid $10 million a year as creative designer by Salesforce. Okay, that's just a thank you for that one. All right, so let's look at deep down now into what's happened on the forex markets. All right, so the dollar will likely get stronger as rates rise, and one of my senior colleagues believes that the DXY, which is the dollar index, is actually going to fall, and he is contrary to many opinions that I think the DXY is going to rise. So as far as you and I are concerned, reader, I think that actually is one for debate. It's not really sure, neither of us actually know, but my opinion is that the DXY index, the dollar index, is going to rise. Also, just going back to dollar yen, which is a favorite of mine, I think the dollar yen is going to rise. You're going to have a stronger dollar against the yen. Okay, cable pound dollar could be interesting, because now that some agreements brought in by Rishi Sunak and Northern Ireland, the EC and Brexit and exit and whatever the case may be, I think we're going to end up having a rising dollar in the near future and a rising FTSE. The reason why the FTSE is going to rise is because it doesn't depend on high-tech stocks. It's cyclical stocks and more of a defensive index, as I've stated previously. As far as Bitcoin is concerned, in cryptos, as soon as I mention cryptocurrencies and Bitcoin going down to $5,000, I get a lot of response, a lot of feedback, a lot of pushback on that. But if we go into a deep recession, you will see Bitcoin all the way down. I don't think Bitcoin now is going to replace any major currency, because there's just no regulation on that, and no state is going to allow their currency to be in high competition with a cryptocurrency. This is Mayor Valensky with Driving Markets. Have a good day.